Let's get straight into what you're making of the kind of movement we're seeing on the Nigerian markets right now. We know at the end of Friday's session, that market ending 33 basis points to the downside.
Yeah, I mean, last week was a mixed performance, I guess, from the NSE. Dangote helped quite a bit. Dangote cement, that is, from Monday up more than 1%. But I think if you look away from Dangote, you'd see some of the banks that reported relatively disappointing numbers in Q4. The market came back to bid them up because the Q1 and Q2 2012 forecast looked pretty strong. So FCMB, for example, was up more than 20%. I think that's really where the action is.
Yep, banks are certainly in focus, and one of those banks has been Access Bank, given the impact of the acquisition of Intercontinental Bank on its 2012 earnings specifically. I mean, we've had FBN come through with some commentary saying that it's upgraded Access Bank specifically to outperform. So run us through some of the rationale there.
Yeah, I mean, we've had a positive view on Access for some time, but we decided to upgrade from neutral to outperform last week because some of the things that we were waiting for finally came through. So I think what investors are looking for really is how the acquisition would impact Access's numbers this year from a cost point of view and revenue point of view. On the cost side of things, I think we got a clearer picture last week with at least 20 billion naira worth of savings alone in 2012. That was enough to lead us to upgrade the stock. And as I said, we haven't even factored in any major revenue synergies yet. So I think if there's one stock to look for in the banking sector this year, I think Access will be it, because in addition to getting some recovery from the banking sector in general, they have something extra going for them. I think that's where investors should really be looking at this time.
Let's take a look at the kind of cost synergies this merger has, or this acquisition has managed to bring through for the bank already, Olubunmi, and what your prospects for the bank moving forward are actually in terms of earnings forecasts for 2012, if we drill down into actual numbers here.
Sure. I mean, last year Access did close to 11% ROE. This year, as I said, at least 20 billion cost savings alone would take you up to something like 16% ROE or 17% ROE. The bank will tell you that as far as they're concerned, 17% ROE is their own worst case guidance. We have just under 17. So if we have an outperform with a stock where you have the bank being extremely aggressive on sort of numbers they have versus our numbers, I think there's quite a bit more upside there. So I mean, I think their forecast is 24% ROE. So even if they miss the 24% a little bit, it will still be way better than our numbers. So I think this is a stock that could easily double in 2012.
Yep, and just to reiterate, I mean, you see the shares adding a further 65% by the end of this year, beyond the year-to-date gain that it's already made of 29%. So certainly one stock that has investors' attention peaked right now. In the meantime, we've got UBA eyeing a euro bond in the fourth quarter, early 2013 as well. And this is part of the 400 billion naira debt program that this company has embarked on. Bunmi, what have you made of that? Because it certainly intensifies some of that competitive landscape, where we know that this is a company that is going to use part of those funds to expand aggressively in Africa.
Yeah, I mean, UBA is a stock that we also find extremely cheap right now. However, I think because of some of the announcements that came out last year and what I guess the market was expecting, the stock has been it's not performed as well as we would have liked. But the talk about the Q4 capital raising programs, I think most banks will want to be in a position where they can expand aggressively, given that the competitive landscape in Nigeria and Africa is changing rapidly. So I can understand UBA's plans from that perspective, but I think the market will be looking first for them to report their Q4 results, which, they've already said that they're going to make a loss. But as you've seen with the likes of FCMB, I think the market would easily look away from that loss number and focus on the Q1 and Q2 numbers, which the bank is also guiding aggressively to.
What do you make of the appetite that they're actually catering to right now? Because we had a couple of weeks ago this company come to the fore saying that it suspended its share sale, citing weak market conditions. It's now eyeing this Eurobond. As I say, it's worth $500 million, and we've already seen yields, yielding 6.15%, and that's dropped from that 6.75% yield at issue.
Sure. I think the thing I'll stress is that we're, 10 months away from this, so anything could change. I mean, I think if you speak to these a bank like UBA, the management, I'm sure they will tell you that they're very flexible in their capital raising plan. So I think let's wait and see what happens on the yield side, on the Eurobond, FGN, and also how well UBA will do over the next 6 months. And I think UBA will then decide whether really it's the right time for them to do this in Q4.
Well, we've got all eyes on First Bank this week. I mean, we had it on Friday, losing maximum points and closing on offer. It's a trend that's likely to be short-lived, many traders say, with a rally expected early this week as we anticipate that company's full-year numbers. Your view on a bank like First Bank?
Obviously, given that we work within First Bank, we can't make too much comment either way on First Bank. But I think it's First Bank and UBA are the two big banks that the market is really looking forward to seeing their results, probably this week or at worst next week. But I think if you draw a parallel from what's happened with the rest of the guys that have reported so far, Q4 is almost it's done. I mean, the focus now is on the first half of this year. So regardless of what the numbers show, whether it's UBA or First Bank or Fidelity or Sky, I think the market again will continue to look for very positive comments from the management of these banks on the Q1 and Q2 outlook.